Hello, happy Halloween, everybody. Happy Halloween, warriors. How's everyone doing today? Dale overslept. Dale overslept today, so face, I don't have a face because I'm the unknown broker. I'm the unknown broker. So I always find it very important to prepare myself spiritually before my day begins. Can everyone see me? Give me a Y if you can. Okay. No?
No, we can't see you, Dale.
Huh?
We can't see you, Dale.
Oh boy. How's that?
I can see your chart.
How about now?
Nope. Wait. Nope. Your video cam is off, man.
Oh, what a disappointment that is.
You came in costume too.
Huh?
You came in costume too.
Yeah, I did. I wonder why my webcam's off.
I don't know.
Here, let's see. Webcam. Huh. I don't know. I may have turned it off. Anyway, let's see if I could get it going, because I was really looking forward.
Us too. I'm really excited now.
I know. All right, let's see. Thumbs up.
Oh.
Oh, well. Okay. So let's get serious. Anyway, I was going to do The Unknown comic. It's with a paper bag over my head. And I was going to say how important it is to prepare spiritually before my day begins. So my prayer is, the organizer has stopped sharing it is no longer visible. Okay. God helped me do tremendous volume today, and then I was going to have people call me and say, sounds good, let's do it, sounds good, let's do it. So maybe next year. So anyway, and we were going to trade off the 1 minute charts. So we'll do it next year, Blake. I'm sure everyone's waiting with bated breath.
Oh,
anyway,
all right.
I want to get back to the theme from last Friday. And that was the third drive that we had in the end last week. So I want to see if the dollar can make a new high. One of the reasons the yen looked negative to me, that's a 1 minute chart, was because while the dollar was rallying, the yen was dogging it. Okay, so what I'd like to see is a Dixie make an attempt in the next couple of days to make a new high. Take out this peak, and I want to see the behavior in US dollar yen going forward. If the dollar can make a new high and all we get is a fib retracement, I'm starting to think that there could be something major setting up here in the yen because of the follow through that we had yesterday. So I don't know what your views are of the yen, Blake, but I think Friday you said under 1380 it would look negative, and so that's an area I'd be looking to short it with stops over the high of the move.
Yeah, it broke down yesterday. So now it's just any bounce you probably want to look to sell if you can get it.
Yeah, you got a little 3 driver here, so it could happen. I don't know what day it's going to happen, but really I'm keying it off with the dollar. I'd like to see the dollar make a new high, and we'll only get a fib retracement in the end. I don't know if that's going to happen, but that's going to be more evidence to me that there is something going on in the yen if it can't respond and make a new high with the dollar for the first time. So Euro's quiet, Blake, kind of a dead board on Halloween. Nothing's really haunting me or real spooky to me except the lack of volume. What do you think?
Yeah, it is. It's actually been a pretty lackluster night of trading. Market's been very quiet. So, and there's just not a whole lot going on at the moment. But we have some Canadian data coming out, and today, you know, with Canadian GDP coming out momentarily, or you know, here within the next 20 minutes or so. We had some, you know, Eurozone data that kind of weakened it. You know, the inflation data kind of came in weak, so the euro moved a little bit, especially against the pound, and it's been relatively quiet. It's going to get busier as the week goes on, as we have, you know, the FOMC, as we have the Bank. Let's see, we have the Bank of Canada. The FOMC, the BOE, and then we have Canadian and U.S. employment data, and I think we have. I'm trying to think, what else do we have? I think that's pretty much it. You know, so I mean, there's other pieces of data that comes along with, you know, non-farm payroll weeks too.
Do you think yesterday's down day in indices was because of the unknown plea by Papadopoulos that perhaps this is going to have long-reaching implications on Trump?
No, I think yesterday's down day was an anomaly.
Yeah. Okay.
Yeah.
What do you think of this situation? You think it could play into the market, maybe a repeat of what happened?
I don't think so. I honestly don't think that it's really going to. If it hasn't made any much of a difference now, I don't think it's going to make much of a difference.
Okay.
You know?
Yeah. Nothing.
No, I don't think this is it. I think we're still waiting for the to see if tax reform goes through. Yeah, you know, I think that's it.
Well, they did float an idea about scaling it in, and the market didn't like that yesterday. That's all I did notice. They talked about scaling in.
Yeah, there's some news about corporate taxes too that might be shelved, or you know. And the market didn't really, you know, care for that too much. But, you know, in all, I mean, it's still, the market's still grinding higher. There's no real reason to be, you know, short the market or anything like that. And risk appetite is still strong. I mean, you look at NASDAQ, we're nearing, you know, the all-time highs again, and you know, S&P is probably not too far off, and you know, the Dow's trading a little heavier, but still, I mean, overall, the market's still pretty bullish here. So I think
we could get that rally in the end if the S&Ps make new highs. That would be a nice shorting opportunity, possibly.
Yeah, you know, I'm already starting to sell some dollar yen, and actually right here this morning. Like I've been selling it like right here, like within pips from where we're at, because I still like the risk reward on the dollar yen from.
You want to show your look, like?
Yeah. I mean, I'd be more than happy to. It's not like if you look at it from a longer term perspective, and that's the kind of viewpoint I've got to take today, because it is you know, I mean, it's not like, you know, we're getting a bunch of moves, but from a risk reward perspective, long term, I mean, your risk is above 114.50 and your reward is down, you know, below 110, you know, towards 108 or whatever. So being short up here, or long yen and short like the dollar yen, it doesn't, you know, I don't think it's a big deal. What I'm really interested in though is, as I put a pattern in play on the euro yen, but I'm a little nervous that we didn't break down just yet. But still, the euro is actually trading quite heavy. So if the dollar yen resumes this downside today, you know, you got to let the market open. I mean, you know, we did get a downdraft yesterday, so a little bit in equity. So if the stock market, you know,
you might be right, because most traders, Blake, they want to sell a test of the breakdown at 1680 or so. And it's more bearish if the market doesn't get up there and doesn't accommodate people.
On what?
I'm sorry. On the euro. On the euro. They want to sell.
Oh,
they
yeah.
want to sell the breakdown of the head and shoulders. Everyone's waiting for that.
Line, yeah. We stopped short on the euro dollar. I mean, I actually have an order that I probably need to cancel now. Already canceled. I'm sorry.
The whole world. Yeah.
Yeah, I actually had an order to sell at 117. Well, just sell 117. Because the way I figured it last night is like, okay, well, here's your neckline, and here, let me just grab this really quick. I just want to be able to grab the other end of it. Okay, so here's your neckline here, and the neckline comes in at 116.70, and what I thought would happen is it would hit 116.70, and people would have entry orders in, and then look to sell and keep tight stops, and then I just thought I'd let some of those stops get triggered, and then I'd get in at 117.
Like how your mind works.
Yeah, it just didn't happen. It's because I don't want to sell the right at the number, because I figure if they were going to push it, they're going to push it right above, and they still might. I mean, I would rather get short right here, and then look for a reversal. But I think everybody's trying to short it there. So the euro is still, like I said, the euro is still trading heavy. And if you think about this from maybe a more of a traditional technical analysis pattern, we might be flagging here. So I wouldn't mind selling the euro dollar if we get up here. Later today. I just don't know if that's going to happen, because you look at like the dollar yen, for example. This is the breakdown that we saw in the dollar yen, and we broke through this 113.50. We slumped to 113. We're back, retesting the breakdown point, if you will. The dollar might, if the dollar yen's weaker, maybe that might lead the euro dollar lower. It's possible, but or excuse me.
Now I see why you sold yen today.
Yeah, I'm selling this little back test here, and I don't mind being short. Again, I'll start here, and even if it gets up towards 1370, 113.80, I'll add a little bit, because overall, again, I'm just gonna make this real simple for people, real simple. Okay, let me grab my pen. If I risk to here, okay, and I call that 1, I'm risking 1. And I'm looking for a limit order somewhere down here. That's 3, perhaps, So you're risking 1 to make 1, 2, 3-ish, and maybe 6. I mean, it doesn't mean that it has to stop there. And there's actually Greg Horvat, who's who does the Elliott wave analysis for ForexAnalytix. So if you guys are ForexAnalytix users, and you are looking at any of the charts and you click on Elliott wave, this is his work. And he actually tweeted something yesterday, and I saw it briefly as I would, just so you guys know. I'll tell you a little personal story. I had we live in an older home, with more land. It's called a ranch style home. Our kitchen was clogged up, and it had been clogged up, and we had a plumber come out, and it was completely, like, we thought we were hitting soil. So we had a jackhammer below our foundation of their home, get to the pipe, and it ended up being just like a bunch of decades of stuff clogged up in the pipe, and we had to cut out that piece of pipe and replace it, and we're gonna have to retile and everything else, and fill the cement back in. And so needless to say, and make a long story short,
pride of ownership.
pride of ownership. It was more of a necessity of getting our kitchen to work again. That wasn't necessarily pride of ownership. It was all out of necessity so we could have a kitchen that we haven't had for like the last week. Anyway, as we were scheduling all this to happen, yesterday was jackhammer day in our house. And so trading, I was kind of running back and forth between trading, watching, the jackhammering going on, making sure they, everything was dusty. We had to line everything with plastic in the main part of our house, just to, keep all the dust off, et cetera, et cetera. Anyway, I saw a tweet from Grega, and he's like a couple things that had helped me out in my trading. I didn't get a chance to favorite it or anything. I just kind of read it and then I ran back. But he said, I keep my target, I keep my stops in, my targets open. And that's a really, really great piece of advice from a veteran trader. Because everybody asks me, hey Blake, what are you looking to make in this trade? And I'm like, I don't know. I'm like, I know I can tell you right now that if I short the dollar yen, my risk is here. That's defined. I don't, that's no questions asked. I'm wrong at that X. Okay. What is my target? My target may be here. It may be here. And if things go really well, it could be really down here. But I give myself the opportunity to risk one to make at least 2, if not 6, if not 3. I give that opportunity, and that's how I trade. I don't cap my upside, because you never know what's going to happen as you're in a trade. So when you're in a trade, you can manage your risk. That should always be defined, but what you're looking to make doesn't necessarily have to be defined. And that's why you hear, people have been saying it for, as long as I've been in the business, and you go north of 20, 30 years, and you probably heard people say the same thing. You want to have a good risk reward ratio, at least 1 to 2, at least. So if I look at a chart and I go, if like you look at the dollar yen for just let's look at it from the other point of view, from the opposite point of view here. I'm looking to buy the dollar yen. What is my risk versus what's my reward? Well, my risk, if you're buying it right now and you're looking for it to go up here, you're like, well, my risk is, is it here? Is it here? It's hard
to define. You're right.
And what's my reward? Is it up here? It's hard. You can say, well, I'm risking 1 to make what, a half, or risking 1 to make, hopefully it breaks out, but you haven't confirmed that it's breaking out. So, it's hard to define risk reward if you're going long, but if you're going short, it's very well defined. And so that's what I always try to do when I'm, trading, is I try to figure out, okay, well, what is my defined risk, and is my reward at least double my defined risk, at least double, if not quadruple, or more than that. And that's the way I look at the dollar yen right now. It's like at these prices, I have a good risk reward to be short. If we get down to like 113, somewhere down, or 113, I'm sorry, 110, and we're in the middle of this triangle, then I don't have a good risk reward to be on the short side. Then it's kind of like a flip of a coin. But where we're at right now, I do have a good risk reward. And plus, you take into account a lot of other different things. You got bonds that are rallying, you got, precious metals that look fairly constructive for longs. You got stocks that are, by a lot of metrics, overpriced and overvalued and overbought. And so you have, you have all of this that's really working for you. So I don't mind, again, I just don't mind being short up here. We get down towards 110, and I'm gonna question, entering a new trade. Obviously, if I get short at 113 and it drops to 110, then I'm in really good shape. Would I initiate a new trade? Probably not. But am I willing to stay in a trade that I established, a couple of weeks ago at 113, like where we're at right now? Sure. Then I'll stay in it. So anyway, that's just kind of the way that I look at opportunity when I see it. It doesn't necessarily. Thank you. It doesn't necessarily make it the right trade, you know, because I could very easily be wrong. I don't, you know, ever have the you know, there's never a thought process in my head that I'm never going to be wrong. I'm wrong probably at, you know, half the time, or, you know, maybe 45% of the time I'm wrong. But as long as I keep a decent risk reward ratio in everything that I do, you know, I end up coming on top. That's why I've done what I do for a living for so many years, because I know how to position myself in a decent risk reward scenario, and then I overlap that with you know, the fundamental reasoning, or maybe the correlated reasonings why I'm buying or selling whatever asset whatever asset I'm buying or selling, you know. So hopefully that helps you out, guys. I you know, again, it's more of a.
How can't it? Forex Made Easy by Blake Morrow.
Yeah. I mean, we just try, you know, to simplify the process. It doesn't have to be a you know, a real complicated process, but there are a lot of factors, you know, and I, you know, when people say, well, you know, they ask me, oh, Blake, do you just look at charts? And, you know, the answer to that question is 100% absolutely not. I don't just look at charts. I do take in a lot of different, you know, like I said, whether it's a fundamental backdrop, it's a theme, it's a correlated reasons on multiple fronts why I'm doing something. It's not just the charts, because if I trade using just the charts, it's like kind of driving with one eye closed, and I just don't do that. So and I wouldn't trade the markets just looking at charts either. It's not you know, what I want to do. Anyway, a couple other things I want to talk about really quick. I'm also shorting the euro pound, and you know, I got into this trade yesterday as we broke below this multi-year trend line, and I talked to you guys about why I'm buying the pound right now, and I'm trying to position myself for Thursday. Look, Thursday I could very easily get stopped out of everything that I'm in, but yesterday was Monday, today's Tuesday. There's your lesson for this week. I'm finished. Okay, let's go ahead and pass it over to Steve. I'm joking. That is not even a funny joke. Anyway, what I'm trying to say here, though, is I'm trying to position myself ahead of Thursday, because Thursday the Bank of England is expected to raise rates. The question is, are they going to have a dovish hike, or are they even going to hike at all, or is it going to be a hike and leave the door open for more in the future? Yesterday, with myself and with Stelios, and you should go back and listen to the very beginning, or the first half an hour of this webinar from yesterday. Just go to the YouTube channel and check it out. We had a very long discussion on why that I think the Bank of England not only is going to hike, but quite possibly will leave it open for more hikes into 2018, and more than what's priced in, more than just one. And if they do so, I want to put myself in a position that I have long cable going into Thursday. So how does that look here? Well, if I'm long the euro pound, like let's say, or excuse me, I'm short the euro pound, long the sterling. Okay, if we get to the 200-day moving average, you know, we're at 87.50, and I basically started opening my position at 88, you know, 20. Okay, that means that I'm in a 70 pip profit going into the Bank of England decision, and if they leave it open for more hikes in the future, you know, into 2018, more than's priced in the market, then we could have a big downdraft in the euro pound, because the euro is already weak. So that's like a trade that I talked about yesterday. I got in it yesterday after, you know, yesterday after the webinar, and I'm talking to you guys about it now, walking you through my thought process on why I'm doing what I'm doing. All right, just so this is something that I did every single day on the Morning Edge webinar for north of 10 years, you know, like, you know, 13, 14 years, is I walk you guys through the thought process of why I'm doing it and what goes right and what goes wrong while it's happening in real time. And I don't know where else you're going to get this type of information for free, but we do give you it here, and that's something that Steve does a really good job with. Stelios, Grega, Nick, we talk through our trades and say, well, what's going right with this trade, or what goes wrong, you know? And there are plenty of trades that go wrong, but this is one that's it's starting to work, and hopefully, in my you know, the way I'm planning it is by Thursday the euro pound is trading a little lower towards the 200-day moving average. And then, you know, maybe I get a little lucky with the Bank of England being a little bit more hawkish than the market is expecting. And then we're sitting in a really nice trade. And if not, you know, I get stopped out, and, you know, we go back at it again next week, finding another opportunity. So that's just some thought process on what I'm doing with the euro pound. So
compelling stuff, Blake. You're
well,
right.
I don't know if it's compelling. I don't ever want to talk anybody into a trade, because the trade that I'm doing right now doesn't, just because I'm in it, doesn't make it the right trade for everybody, and doesn't make it the right trade, you know, to do, because I definitely can take a loss here, but I'm telling you why I'm doing what I'm doing, and it doesn't necessarily mean, you know, do what I do. It's just, it's hey, this is why I'm thinking it, and you know,
have a rationale.
I do, and look, and I'll tell you right now, if we get back to 88.50 ahead of Thursday, so let's say, see this red line right here, let's say we're back here at 88.50, I can guarantee you one thing: I'm not going to be short the euro pound going into Thursday. You know, the only way I'm going to stay short the euro pound is if it's profitable, and hopefully we get some, you know, some pound buying over the next couple of days, or maybe even, you know, maybe even just euro selling in general over the next couple of days, which puts us in a position. You're in a position of power when you're in a profitable position going into a news event. Okay, you've got the upper hand. If you go into and when I say news event, like a major, you know, interest rate decision or jobs report, like, for example, if I'm short the dollar yen, and I'll give you another example of what I'm doing. I'm shorting some dollar yen today. Okay, great. I'm up about 10 pips. Fantastic. Okay, let's say the dollar yen drops to the 618 retracement by Friday. So let's say by Friday we're trading here. Okay, we're trading at the 112.70 area. Okay. So we get to the 618 by Friday. If the jobs report, if I shorted it at 113.40 and it's trading at 112.70, and I've got 70 pips or so in profit, okay, and I can sit through that jobs report knowing that if it's a good jobs report, I'm going to get stopped out for break even. So be it. Okay, it happened. But if I'm in a position where I shorted at 113.40 and it gets down to 112.70 by Friday, and then we miss, this thing's gonna be trading down at 112, and now I'm sitting in 140 pip profit, you know, from being short on Tuesday, which is today, at 113.40. And so what I'm trying to do is I'm trying to put myself in a position of power ahead of this key data point, which comes in on Friday, which is the jobs report. So you guys can kind of get an understanding of what I'm trying to do, because I can tell you one thing: if we're trading at 113.30, where we're at right now, on Friday, and I shorted at 113.40, I will not be short the dollar yen going into the jobs report. It just ain't gonna happen. Yeah. So
why hold?
Well, yeah, I mean, no, you know, there's no
down. Why hold?
Yeah, or if I'm up 10 pips, there's no reason to, you know, roll the dice at that point. But if I'm sitting in a 50, 60 pip profit, then I'm willing to, you know, to risk a little bit to have a much bigger reward. So, sorry, I have the yawns today.
Nice commentary today, buddy.
Thank you. It's Halloween. It's going to be a long one. Okay, so we have GDP data coming out of Canada, so stand by. We are expecting, shoot, where's my numbers? We are expecting 0.1% of GDP, and then we have some inflation data coming out too. So let's see what happens. Oh, wow, strong dollar. Canadian just getting pummeled right now. Pummeled. Wow. Well, that is weak Canadian GDP.
Minus 0.1.
Watch Canadian yen. Oh, Canadian yen's going to get destroyed. Why is it going to get destroyed, Steve? Because everybody was long the Canadian yen on this big inverted head and shoulder pattern. Now they're all getting smeared.
Yeah, in a way, happily, I'm not on it anymore. I closed it with 143 pips of loss because it was obvious that this was not anymore a bull flag.
Yeah, I mean, you look. I get why you did what you did at that point in time because you were looking at this.
I would do it again.
Yeah. I mean, and then you're pivoting off of the neckline, but now you got everybody that was, everybody that was long this thing, is getting.
Yeah, great transparency, Steve. A lot of people get amnesia about their bad trade.
No, I wrote it yesterday in the chat room, but it was,
Yeah.
webinar that I closed it because it didn't look anymore like it was a bull flag because it was, it was very heavy.
So hey, I'm sorry, Steve. Hey, I'm gonna let you take over, and then you can talk about it. I just want to let everybody know on this Canadian, just really quick. We're approaching the 50% retracement, and this is like a resistance zone, pretty big one too. So yeah, like this, anything above this 129.35 to 130 is going to be pretty important. So I'm gonna leave it at that with you and turn it over.
Pretty important low in 2017, Blake. So yeah, good eye.
Yeah, just something that I think everybody should be paying attention to. So I'm gonna switch it over to you guys. You guys have a great one, and Steve, happy Halloween. I know you guys don't celebrate it over there in Athens.
Actually, although it looks fun. I mean.
Oh, it's so much fun. Kids. Tonight I'll be out and about, running through neighborhoods with my kids and their candy bags, and we'll be pulling a wine cart.
Actually, we do have our own kind of Halloween. It's another tradition in which you dress up, but the only big difference with Halloween is that it's not supposed to. I mean, the theme is not about supposedly being scary. It's just about dressing up. We call it carnavalos.
Oh, okay. Well,
carnival. Yeah.
The scary part's the fun part.
I know. I agree with you.
It's a fun part.
I agree with you.
My kids like being scary people, which is funny.
Put your goalie mask on tonight, Blake.
No, I'm gonna be
Jason.
I'm gonna be a very deadly stuffed animal. might be a unicorn. All right, see you guys. I'm gonna let you take over. Bye, guys. Have a great trading session. And Steve, thank you very much.
Bye, Blake.
Bye.
Okay, Vamsi, my eye just fell on a pound Aussie comment, and I'm in total agreement with him because the pound pairs have reacted perfectly. The pound Aussie, I don't think we had a look at them yesterday. The pound Aussie, after just 2 days of downside, held this support line beautifully and is rebounding higher. The pound Kiwi, on the other hand, despite being overbought, never even made it back to retest the breakout area. It simply, after 2 days of moving lower, it simply, started pushing higher once again. Now the next target for this is obviously the 127.2 at 194. So we have, I believe, at least one more 100 pips of upside, and we take it from there. But yeah, they both remain, Vamsi, extremely well bid. Alex says New Zealand employment data this PM as well. Vamsi also puts a link here. I'm guessing it's for one of these pairs. Yeah, the pound Aussie. Yeah, it's what we saw. I actually interpreted this more as a triangle, but we do agree on the false break. That false break was a very nice trap because that false break was also, not a beautiful one, but regardless, it was a head and shoulders formation, right? Shoulder, head, shoulder. So this was also the neckline, and this false break here, I bet trapped a lot of people in it. Okay. So yeah, I'm in total agreement with you, Vamsi. Zach's having workers in the Zach says, oh hell, Blake, Zach's having workers in the house while he tries to work. Yeah, but he still manages to do so, Zach. Blake had to fix a plumbing issue he had, that's why. Thank you, Zach. Canadian data, yeah, we saw that they were a little bit weaker. If you're short at 113.40, where would you put stop, above 200 moving average or above 114.35? Asked Rick. I'm guessing he's asking Blake about that, but let's have a look at it together. Okay. I still remain skeptical about the USD yen. Reason being is I wrote yesterday on the chat room as well, when we were almost at the very, very lows actually, that 113 is soft support for the USD yen. The reason I wrote that is that on a closing basis, 113, as you see, held price action for several days here. It did it also for 2 days there. And I was also monitoring this formation as a triangle. That's why I expected a break higher, as we did have a break higher. But now we came back, we are retesting this area, which was both horizontal resistance, can now act as horizontal support, and the broken triangles resistance, which can now act as support. So to be perfectly honest, although if you look at this on a 4-hour chart, it was an ascending wedge and it did break lower.
I think Forex Stop Hunter called that out live, right?
You did. And you remember we had a look together at the 4-hour chart, and I told you that yes, for that to work, this ascending wedge needs to break lower, and it did. Okay. The question is, what happens from this point?
Yeah.
To be honest, having broken below the ascending wedge, I'm guessing that the chances are a little bit higher of seeing at least one more move lower towards there. So I'm in agreement with Blake that, this might have one more leg lower, but on the other hand, seeing on the daily, I would not be taking this short myself, because, Blake on average is a much shorter term trader than I do. In general, I don't care to enter positions and exit them like intraday unless something happens. I mean, the other day I held on to USD-ZAR, for example, for roughly 24 hours because I wanted to use its profit. It made a big move. I was like more than 1.5% in profit within 24 hours, and I wanted to use its profit, to fund my stock shorts, so I don't have that in the way, because as I've told you, when I short stocks, I always consider it a losing trade in advance. You know what I mean? Because obviously, this is a huge bull run. There's no question about it. So if we do this in the USD yen, and now this is a 4-hour chart, I would then be looking for this area, which is roughly the 111.60 to 112 area for support, and only a break below there would actually get me, interested in more downside. Until that happens, I remain neutral to bullish actually, but not enough of a conviction to anyhow commit here. By the way, I don't know if Blake saw it, but Ziggy made that for him in the chat room. The happy Halloween. Okay, so let's
I'm so disappointed that my webcam didn't work today.
Your webcam did open all the times you tried to open it, but it was black. It was just showing nothing, black. That's why. That's why at the end I closed it for you, because we couldn't see absolutely anything. It was like black, and it was taking part of the screen.
The Unknown Broker would have been a real good Halloween skit.
Why don't you send the picture? I can't guess how it is.
All right, next.
Let's have a look at the pound CAD. Luca.
I rehearsed all night, man.
Pound CAD, yes. You know, now that we have this information, we can even redraw a little bit the neckline like this, for example, because you know you don't know in advance which weeks, candle weeks, I mean, to take into account or whatever. But yeah, I agree with you, Luca, because pound CAD also behaved perfectly. I mean, it came down, it retested the inverted head and shoulders formation, and the next serious level of resistance is up there, roughly at 175. So I'm 100% in agreement with you. I mean, we had already seen this setup, and I think it still looks beautiful. I mean, pound keeps overperforming at the moment, and you know, from a basic technical analysis perspective, let's see that is just an actually this is more of an Elliott wave, but let's say that this is just an ABC. Okay, so even if you want to take this as an ABC correction, we would still have a target. Let's measure it together. We would still have a target of, let's take this, let's take this, and let's take this, of 173. So even if we take this as an ABC, it still could push higher to 173, which is another 250 pips higher. Okay, so why not? I mean, it looks pretty good. Let me readjust also. There we go. And the implied head and shoulders target is at 177.253, which actually coincides perfectly with the 38.2 of the whole move lower. I remind you how we became initially bullish in the pound CAD. I had traded that to the long side here because we had a false break lower there. Okay. We then started riding the bottom of this channel. We managed to break above it. We then turned lower once again, but the move lower was corrective simply because it held beautifully this channel, and then we broke above this channel. We came back, and now we're breaking higher again. So I think that pound CAD should at least produce a few hundred pips more to the upside at the very, very, very least. Even, I mean, if all this is part of corrective price action. Do you use? Yes, Kerem, I do use CFDs. Check out Gregor's chart on New Zealand yen. Could be just the beginning. That is my kind of trade. Brett says, definitely, let's do it together. And Michael says about the Aussie Kiwi. Okay, let's have a look at the Aussie Kiwi, and then let's have a look at the Kiwi yen, both on my charts. Listen, yes, it was not a pretty close, and I have explained, I think, in 2 consecutive webinars why I think that the Aussie Kiwi might underperform in the short term. But on the other hand, this can simply end up being a bull flag or a pennant, and I would not turn bearish for now. I mean, at least for the medium term, the Aussie Kiwi. I mean, we might see more weakness in the short term, but in the medium term, I have absolutely no reason to be looking lower. We got the rejection from a perfect point. It was a nice confluence there. We might have more downside, but I don't think that it has turned to the downside in the medium or long term. So I would be inclined to be looking to buy the dips and not sell it. Okay, so now let's have a look at the Kiwi yen and how I see it, and let's see then what Gregor says on the Kiwi yen. Okay, so we had said since a long time ago that the Kiwi yen has one of the cleanest technical formations, because this was a very long-term resistance zone up there. You can see how far back it dates. It dates back to 2014. So the ceiling of the price action was, I mean, multiple times tested by the market and proven to be, extremely important. And then we also had this support trend line, which had also been tested multiple times since June 2016. So this was obviously a flat top triangle, and since it was a long-term one, a break of either direction, had a very, very good chance of accelerating to the direction of the breakout. And this is exactly what's happening here. And I think the Kiwi yen is probably going a lot lower. What we had said a few days ago when we had looked at it is that any rebound to 79 would be a gift. We didn't get that, because you rarely get so nice gifts, but that's the case. So I do think we're going lower. Nothing goes in the straight line, but I do think we're going lower. So let's now look what Gregor is seeing here. Okay, Gregor in Kiwi yen. Let's see what kind of structure he says. Yeah, we're in a third, 1, 2, and then this is an extended third. So more downside, rebound, more downside. He hasn't drawn more, but I'm going to tell you what that entails afterwards. Then we get a wave 4 that should retrace back maximum at the beginning of the smaller time, the lower level 4, which is there, and then another push lower to wave 5. I'm in total agreement. And this is the weekly chart. So as you see, he's looking a lot lower. 1, 2, 3, 4, 5, A, B, C, and then at the minimum. Yeah, okay. So this is a huge A, B, C at the very minimum. Yeah, a lot lower actually. Obviously, that implies a weaker. In order to see this kind of structure unfold, which is very, very bearish, it implies that the Kiwi's weakness is going to resume, which I'm in total agreement with that. I mean, let's have a look at the Aussie and the Kiwi. Let's have a look at the Kiwi first. First of all, the Kiwi barely managed to rebound a single day. It reached the first area of resistance that we had, the 68.80 area. So it didn't even make it, to the 69.75, and it seems to be rolling lower once again. So where is the next target? The 127.2, which is at 0.66 and change. Okay, so this resumes the downside, and I think that the Aussie has some catching up to do as well. This also failed to rebound, to the 77.40 area, which, as I had written to the analysis, would be also a gift to shorts. And it seems to be ready to resume lower. And now, other support levels, you can see them here. It's 75.80. It's then the 75 area. I think we're going lower here as well. There's no question about it. And it's not even giving strong rebounds for people to be able to join. Vamsi weekly flat top triangle breakout. Yes, Vamsi. I know we had been talking about that for a long time until it finally happened. So I know what you're going to show. Yep, exactly. And the next area is much, much, much higher. Ibex, the gift that keeps on giving this week. So much upside to catch up. Absolutely, Luca. Now that things are de-escalating. Absolutely. We've had a clear breakout now. Obviously, if it even does that, if it's a big if, right? Or that area, as a matter of fact. And then, you know, targets are a lot higher, a lot higher. What's my opinion on Euro Swiss? We've seen Euro Swiss many times, and I said, actually, I think I'm one of the very few people that had mentioned it before it actually broke out, because the change of behavior was quite obvious to me here. I remember mentioning it a long time ago in the webinar as well, and we had been monitoring it every couple of weeks because it was very slow. But I really think that there is no real resistance until 120. That's what I think. And you know, it has been breaking out and breaking above one level at a time, only creating short-term consolidations and then moving higher again. I don't really see, I mean, if we don't have something seriously changing in geopolitics or in Europe, I don't really see.
Looks like a three drive, Steve.
It might be, and it might produce some kind of a pullback, but you know, in the medium term, I see really no kind of resistance until the previous level of the S&P's floor at 120 whatsoever.
And you know, that is correct. There were only two other people in the whole cosmos that saw Euro Swiss at the bottom. You and two other people. Really? Yeah, it was on Reuters.
No, you know something. I was trading the Euro.
Way ahead of the curve on that one, Steve. You were saying instead of shorting the euro, buy Euro Swiss. I mean, you were all over it at the bottom.
Yeah, you know, I was very actively trading the Euro Swiss while we also had the floor. That's why I was inclined to look at it more. I actually made quite a lot of money trading the S&P floor. And you know, I was prudent enough to stop doing that a few months before the floor broke, because I started seeing, first of all, a technical change in behavior, because we never got any rebounds anymore from the floor, while initially we were getting rebounds of the floor. And second of all, the rhetoric of the S&P had changed, and you know, the floor has started becoming a problem. I had you know, serious conversations with people in Swiss banks, etc., about it. So I could have given back almost everything, I'm guessing.
You know, so you know gnomes, G-N-O-M-E-S. You know the gnomes of Switzerland.
No. Although one of the guys I know there is quite short. So I don't know if that. I don't know if. USD SEC, yeah, USD SEC. Let's have a look at it. Actually.
Oh, we have a great interview today, buddy.
Actually, you see, sometimes memory is short. I am long USD SEC. I forgot to tell it yesterday, but I told it on the chat room when I did it. I'm long USD SEC, but it hasn't done much from 834, if I remember right. But it hasn't done much since. I'm long half a position because I was afraid that this is going to run away, and I'm still afraid that might be the possibility, because as you see, we are having a short-term consolidation and we never actually came back to retest the area. And I'm looking to buy more if we come lower. I have an order to buy more at 822 and 50, if I remember right. I need to check because I put it the same day. I bought half of my position here, and I really think that the USD Swiss can also accelerate higher towards, you know, this area, the 80s, the 870 area. I do realize that it's currently overbought. That's why I only bought half a position, because I didn't want it to run away from me. But I'm willing to add lower if we retest that area. That's why I had drawn it there. But I'm totally okay being a little bit out of the money here. I think that the USD Swiss has more to move to the upside for the exact same reason that I believe that the Euro USD has more to move to the downside, actually. I do still believe that we're going to test 114.50. You remember I was saying since a long time ago that if we break below, you know, this area, we're going to go to 114.50. I still believe that's yes, you know, the major scenario here. What did you want to say?
I just heard a pearl for people like you, Steve, that are portfolio type FX traders. that if you can't remember the price of all the instruments that you're trading, you're in too many.
No,
I bet you could remember. I bet you know. You know, I can name a pair and you'll tell me where it is. But you know, a lot of people. Okay.
Oh yeah, you mean know where the quote is? Yeah, but sometimes
Yeah.
I don't remember exactly. I don't remember exactly my entries, etc.
Oh yeah.
And the reason is simply because I'm not a scalper, and for me, price is not such a sensitive issue. You know what I mean?
But you know the last. You know the last. If someone said, "Well, where's this trading?" You know where it is.
I do where it's trading, but sometimes
Okay.
I mean, for me, 10 pips of difference in a position make very little. You know, play very little role, because I'm looking to make 200 pips or lose 150 pips, for example, as I did now in the CAD yen. Those are normal size profits and losses for me, because I'm trading for at least a few days each position. But I use the equivalent leverage, of course, right? Because if you try to use the leverage of a scalper, trying to trade, 200 and 300 and 500 and 150 pips, you're done. Most pegs get broken at some point. Absolutely right. Ronit is showing us a view of Euro Swiss. Let's have a look at it. There we go. Okay. So you consider this area to be of importance, the 117.36 area, right? Okay, let's see how it reacts. I do think that it's not going to be a straight line, but I do think that we're going to 120. I still believe that. My pleasure, Tom. That was a good signal, Euro fall. I agree with you on it. Ziggy says he can't remember one. I'm sure that that's far away from the truth. Yeah, Luca, I wrote that in my analysis. Thank you for reminding me. Let's have a look at the USD CAD, because Blake left it there to me, but we didn't really have a look at it. Listen, for me, 130 is very important, because it's both horizontal support area that can now act as a resistance, and it's also the 200 DMA. So I do believe that this area of it's also obviously psychological level, because it's a round number. It's 130. Okay. So I do believe that if we make it to 130, at least initially, at the very least initially, we should see a reaction of it. Okay. And needless to say, if you were like some people successfully in the chat room did, because they were looking to catch a reversal, I think Amanda was one of them, and not only. If you were trying to catch the reversal early on and you made it, that's great. But I don't think this is a place you should be buying USD CAD anymore. I'm not saying that it doesn't have more upside, but I'm saying that the vast majority of the move upside has already been done. And I think you should be quite careful from this point on. Okay, I'm still inclined to be looking to short this pair, but not yet. I mean, I don't see the elements I need yet, but I do believe that the chances are that the USD CAD has more downside, and the move lower is not complete. But we are going to get a stronger correction than I initially thought we would. Okay, I initially thought that 188 would cap the correction. As it seems, it won't. And, the corrective move higher seems to be more complex than that. Let's have a look at gold. And actually, thanks for reminding me, because by saying gold, Dale, by the way, do we have a guest today?
Yes, Steve. She's Samantha LeDuc is here and waiting. So.
Okay, perfect. So a couple of things very fast. Treasuries, they broke below this ascending channel. They provided us with quite a strong pullback the last couple of days, Friday and Monday. They are retesting now the broken channel support as resistance. I'm very interested to see what's going to happen from here. If this area actually manages to hold the rebound and they keep on moving lower from this point, then gold should also follow lower as well. Okay, it's already rolling over today, but it's early in the day. So to be perfectly honest, as long as the treasuries don't prove that this break lower was a false one, I'm neutral more or less gold, because this structure is very choppy. But if I had to do something with gold, I would be short. Okay, and this is a strong area of support, by the way, at around 1260. So be careful. I mean, this might also create some kind of a reaction. Okay, thank you everybody. So I'm going to see you tomorrow. Enjoy the interview, Dale.
Thank you, Steve. Great analysis by Samantha. I'm going to make you the presenter now. Look forward to seeing your screen, hearing your voice. You'll see the audio and the screen share function right there. Happy Halloween to you.
Can you hear me?
I can hear you, Samantha.
Good morning.
Good morning. It's a treat to have you and great to meet you.
It's very nice to be here. Thank you for the invite. That was sweet.
Yeah, we'll keep going with the Halloween metaphors. So, do you see the screen sharing option there?
I do. All right. Hold on one second. So sorry about that.
So we could look at your setups.
I have, which do I choose as far as which particular?
Whichever screen that you had. There you go. So we see your website right now.
All
okay.
right.
Is that what you want?
Sure, that
Is
works.
that what you want to show?
I have 3 monitors open on this particular computer, so I'm just curious what you get to see. But you see the website? That's perfect. That's fine. Thank you.
Okay. All right. So I'd like to start off, Samantha, by finding out how you entered the business. I read a little bit on your Twitter handle about that you left the financial tech or the tech industry to become a trader. And I'm interested in who you blame for you becoming a trader, and how your journey developed, and if there's anything from the beginning that still haunts you.
Oh, well, you are really in the Halloween theme here. You're going to regret those words, unfortunately. Okay, so yeah, full disclosure, this was not a career plan.
Okay.
And I definitely want to get to talking about market calls and what's going on in the market too. So I'm going to quickly do the humble origins, if you will, because it's a personal experience. Everyone, I think, has their own as they enter this full-time, in my case, full-time professional trading. I actually ran a business for 10 years. My son had a medical emergency. It was the impetus. In fact, he's perfectly fine now. He's a punk 15-and-a-half-year-old. But at the time, he was 4.5, and he suffered a stroke. So I actually sold my business from the hospital, Children's Hospital in Boston, very few notice. And I knew I wasn't going to be returning. A year and a half later, he was in school, fully recovered. And I said, okay, it is September 2008. Right at the Lehman time, if you will.
Right. Yes.
And I chose to make sure I was doing a job during the day, that I could meet the kids off the bus. And in particular, that was something I had wanted to do, get into this business of, exercising my mind, if you will, and utilizing some returns from the sale of the business. And I ended up full-time trading on September 18th, 2008. That's honestly how I got into this. That's
a great story. So I came from a one-parent family, and my mother found something to do so she could be home when we got home from school. She was a librarian at the school. So you were driven so that you could be home with your son and then he recovered, and you still wanted to be around to watch them grow up.
I have been working from home, so that wasn't.
Yeah.
Yeah.
Okay.
Yeah, I was still primary. Okay. There's no question about that. My point was just to have. It's all consuming to be an owner operator. It's very. Yeah. And I'm very intense. I'm an intense mother. I'm an intense owner operator. I'm an intense analyst. So I do not do things lightly. Anyone who's looked at my videos and has seen my trading journal knows that I really love to learn. This is the best game in town. It's also, you know, constantly evolving, never boring. I could never trade one index or, you know, one sector or a currency.
We get plenty of, we won't need brain teasers in 20 years because every day is a brain teaser.
Absolutely.
In our career.
So this is how I got into it. I also didn't see any business that I wanted to enter into that particular time, 2008. It just seemed like I had no inspiration for a business, and this was very, very interesting to me. And then, of course, I got lucky. I made, you know, on my small initial investment, a good size, more than 400% in the next 6 months, mainly shorting. And that was, again, you know, the drug, if you will. Oh my goodness, this is not only mind stimulating. I love business. It's going to be a continuous learning environment.
So were you self-taught? How did you know to, you know, most people would not have been sophisticated enough to come in when there was euphoria at that time in the market and think about shorting the market. Did you read anything that influenced you, or are you completely self-taught?
I'm definitely self-taught, but self-motivated to find mentors. So what I did, in typical in my fashion, is I went all in, meaning, okay, what's the best platform? What's the best aggregator of information from which I can learn? And who are the best traders and or money managers? Because at the time I wasn't sure which route I would go. And I basically, and I mean, I did things like sign up for the chairman's letter on the street so I could find out all what the analysts do and which resonated more with me. And then
you were hungry and thirsty for knowledge.
Exactly. So I actually identified some super traders and some super money managers, and I said, can I mentor you? That was how I got out, if you will, and met people in this space, and then followed them, learned from them, took what basically fit for my own personal style, my own personal experience, and I've been evolving that over time, and that has worked for me. But yeah, I'm insatiable with the knowledge. This to me is a lot of
So let's move on and share some. And I really love the fishing metaphor that you use on your.
It's universal.
Were you a fisher lady before you came up with this metaphor, or does it derive from give a man a fish and he has a meal for a day, teach a man to fish and he feeds himself forever?
It is that idea. It is basically, I wanted an idiom that would be understandable in multiple languages, and it is a universal concept, no question.
Okay. Beautiful.
So that was it. It was the main idea, and I just ran with it. It's a lot of fun. It's a lot of play, if you will, on, you know, the fish stories, and you know, this is how I have had more fun with a serious topic. So
and you're the captain.
And I'm the captain, and it is, you know, get on the boat, come on, let's go fishing, and you also have flexibility. I have, you know, the live trading room, and folks can pop in for a day, a week, a month. I do a weekly newsletter, which is more macro or investment focused. The room, of course, is going to be chasing and swing trading. I am primarily a basket swing trader, so I like to identify themes and then trade around that theme, but earnings, forget about it. This is crazy, and that's a lot of chasing, up to earnings, lottos during earnings, and then of course after earnings. So I am, as you know, equities trader, options on equities, and using.
Okay, so I teach, even if you have your intelligence gathering, like your excuse me, your mentees or your subscribers, they're all still captains of their own ship.
Absolutely.
Okay, we all are captains of our own ship. We don't blame anyone for our mistakes. If we crash the boat against the rocks, we've done it ourselves. And if we're in smooth sailing waters, we could also take credit for that. So why don't we take a look at some of your favorite fishing holes?
That actually goes to, there are 3 themes, you're right. I haven't even looked at this and like, where is that? Favorite fishing holes, you're cute. So the chase, the swing, and the trend. I really like to, first and foremost, follow trends. So one of the prime examples of that is this summer, I identified a bottom that I felt was a bottom in oil and gas companies. This is an XLE, just an example. And
it's not showing up, but I saw you trying to move it over. I'm
still looking. You don't see it?
No, but I saw you move it over. You might have to stop the screen share and start it again to get to that monitor. So.
Okay, I can approach that a different.
There you go. It's see, so it disappears. You bring it over and then it disappears. So.
All right. Well, in any case, I tweeted about this back on August 22nd that we were going long the XLE and relative components. For me, that was a trend reversal time, and I wanted to be long and incrementally adding to it. So that was actually up to 12 oil and gas plays from August 22nd all the way until September 26th. So that's how I ideally like to trade. But no, this is very different now in regards to earnings season. It's crazy. This week will be macro focused. We have way too much going on, especially tomorrow. They bring tons of fireworks. So,
what about other events that are market moving, like central banks and non-farm payrolls? Are you more inclined to step aside or trade through them?
Oh my gosh, definitely trade through them. This is where, like every weekend, I'm putting together a list of kind of the most important charts that I see, whether it be on volatility. This is, one of the volatility charts that is, talk about volatility, but we don't see it. Trying to predict it is one of my, main themes, if you will, patterns and volatility. I'm kind of known for that. So I put together lots in regards to market direction and then particular, divergences, interest rates, commodities. All of this is driven by macro. It's a macro backdrop. So
you trade narratives, Samantha.
I trade absolutely a macro backdrop. Is inflation ready yet? And then specifically, what are the sectors and stocks within those that are ready to go? Like the U.S. dollar, thesis that I had back in September. It was time for a bounce. That type of thing.
I see. Okay. And how does the dollar figure into what you do in stock options? You trade you ETFs around the dollar, options on those?
Yep, ETF around, this was very much macro backdrop, and then identifying obviously what happens with gold and rates, and as a result of rates, financials. So there's a whole bunch of focus on the macro that drives the selection, if you will, of stocks and the volatility of that movement as well as just, this is a pullback to support, trading the dollar long and the euro short. So these are the macro themes, if you will, the whale trades, to go back to the fishing hole theme. And then the swing trading, as I mentioned, with oil and gas, which is very much a theme that I think has legs, or I should say stay with the current, because it's going in one direction quite smoothly, versus the chase. The chase is really very much about, oops, wrong one, sorry. Did I just lose you again on my screen?
There, we got the bonds.
Okay, so this is my trading journal, okay? And this is very much a chase type of atmosphere with earnings, very much.
Yes.
We traded Expedia and Humana, and these are comments on other particular opportunities. But all of this is against a backdrop of what bonds are going to do. Okay, this was last week, but it still hasn't decided. I'm waiting and positioning for a big bond movement. And I think many, whether a macro manager or a fund manager or us active traders and investors, we're watching bonds like a hawk because they will have a big impact. And the bond market is 6 times the size of the equities market. So we should watch the bond market. Obviously, for retail traders, which I serve primarily, TLT is our vehicle of choice. So
I like it.
This is how the macro to micro focus for me has evolved, and I do both.
Okay. So do you have a bias? I see you have this area circled here, possibly a failing rally that we're looking at in the bonds.
I don't think it's a
last
failing
November
rally.
or new highs.
I don't think it's a failing rally. So it has not confirmed in any way, shape, or form, right? We had a little bounce, the past few days, but that is not. This is a week. This is going to be weeks before. But regardless, there are some So the intermarket analysis that I do is playing an awful lot with ratios and indicators and patterns. So when I spy, obviously the green arrow, you can see this has been an oversold area where TLT has typically gone up. Right. In addition to that, you can see when it gets above this special indicator, it has not just gone up, it's skyrocketed higher, skyrocketed very quick. I mean, we're talking a spike up situation.
Impulsive, Ellioticians would call them impulsive moves. They get from point A to B in a hurry.
All right, well, this is my whole pattern recognition eye, and then I put this obviously to today. We did, cross over, if you will, retest, crossover, retest. Are we going to fail? Everyone is quite worried that bonds and equities are going to fall together, or we're going to have a melt-up market and bonds will crash. Regardless, this is telling me, that's why it's in blue, it hasn't confirmed one way or the other, that we have a higher probability of bonds going up, rates coming down, and that for me also falls in alignment with TNX, the 10-year, which has an open gap that has not been filled down around 1.87%. And I know everyone's talking about inflation and new Fed chair and I say, I see a gap that needs to be filled. I see bonds that are looking to go up, maybe not. I see volatility as an absolute trigger.
So we missed the gap fill by going to 2%. Did we eat into the gap? Did we eat into the gap at all?
Nope, it is completely unfilled. 1.87 area is completely unfilled. And
that's
with that,
pearl.
That's a pearl. Okay. So when I look for all of these different reasons, I'm also looking to justify my price, my market call. Okay, now this is true. Right. Many people they discourage that. I am fully on board with it. So I'm looking for narratives to support the price action. I don't like relative weight diverging with the S&P. We know what drives this index higher, the Facebooks and the Apple. I do not like the look of commodities at all. I am not a commodity bull. This is,
except oil.
No, I think oil is going to pull back before it goes higher.
Okay, all right.
So
that all kind of plays into the bond surprising people and making new TLT, maybe making new highs and putting in a third drive up there above 140.
Correct.
Is that what you're thinking?
Exactly. And then once we have filled that gap fill in the 10-year and bonds have fulfilled, if you will, their destiny, I think,
okay, I like that.
I think it's done. Then I think that's, 2018, 2019, we turn in rates in earnest and we don't look back. I think that'll be a generational low. So yes,
wow.
I am trading short term, I am trading swing, but the backdrop is against this trend identification, and I simply see bonds, and I don't see inflation in the same way that is talked about right now.
You see deflation, don't you?
I see disinflation.
Okay, that's in between. Okay.
Yep, I see disinflation, and there's a much better chart of this, if you give me a second to find it. A much better chart of this. Hold on, can I?
Sure.
This is one, obviously, but I like this particular one better. Yeah, more to here. I also have a stock bond volatility ratio, which has triggered, but it has not confirmed yet. But here it is. I like this one a lot. So this is CRB, and this is on a monthly, and I know it's probably quite small, but do your best. We have multi-decade lows in commodities, right? Mm-hmm. So when this gets above concrete, I consider this concrete, then inflation will be off and running and so will rates. It's not there yet. So everyone is very quick to jump on the inflation bandwagon. It's not there yet. Once, and this is my thesis, once rates fill that gap, the 10-year fills that gap, bonds have finished their last hurrah, which would be obviously a nice head and shoulders, and then that gives commodities a little bit more time to work up, an appetite to push through that line, get up and above and stay up. Then we have confirmed inflation. Does that make sense?
Yeah, it does. And great technical argument and fundamental argument. So I'm very, very impressed and have really enjoyed taking a look at how you, and the passion and the laughter that you really love what you do, Samantha, comes across.
Well, thank you so much. I do. I like this. It's good to also help others do this. I really enjoy the analysis. I like to educate, and of course trading, but there is a lot of work in creating this body of work. So I appreciate you giving me an opportunity to kind of show it off a little bit. Thank you.
Yeah, and it's top drawer. Okay, so some interesting looks with what's happening with bonds and commodities and the dollar. You think the dollar, most likely when the bonds peak, the dollar will peak too, and dollar will head down, and that'll be supportive of higher commodity prices and higher interest rates sometime next year.
But we're not there yet. So most people don't trade based on next year. Let's be honest.
Right. So you're keying a lot of your work for 2018 though is predicated on this move in bonds to fill the gap and a breakout in the CRB. I'm just wondering how you think the dollar will fit into that puzzle. Oh,
this lower, but we obviously are in bounce mode right now. Where did I already do this? Yeah. So this, which date was this? Oh, 10/22, so not too bad. So this was my thesis in late September that we were going to bounce, and we did. And by the way, this is CAD as well for those who, because I know you guys trade a lot of Forex. So this to me is a counter trend bounce, and it will the resumption of the downtrend will continue in 2018. But for right now, we have a lot of chop. We have a lot that is undecided, from goodness, the Fed chair to the tax, the draft of a tax bill, and then its chances of passing, and unrelenting buying in the momentum stocks, which I do see, by the way, glimmers of that slowing and a movement to value. I dare say that because funds are blowing up left and right who are value investors. And I personally only have a handful of what I would consider value stocks in my trend trading portfolio, but I still do see firms.
Samantha, sorry to interrupt, Dale and Samantha. We had been able to see only a TLT chart that you were showing, and we're just now seeing.
I knew that.
Part of the website, it says Wednesday brings the real fireworks. The ADP report estimate may be a miss. So we missed some of the charts you wanted to show.
I didn't hear you because I can't see what you're seeing, unfortunately.
Okay. Anyway, Samantha, that we haven't seen the CRB chart. You know, I didn't want to keep bringing it up since there was an issue with
okay. I'm so sorry.
But I wanted to keep the flow going of the interview. So, you know, we can imagine in our mind. So next time it'll be cleaner, or you'll have some practice of showing the different charts on the screen. But I do want to say that if I was a novice and I wanted to learn how to trade, I would definitely look you up.
Oh, thank you. I hope I don't attract newbies, because I think this is too sophisticated for newbies. I think.
Okay, I think you're right.
Yeah, no, there's no way I have the focus on educating. In my live trading room, there's no question. It's okay, not just what's moving, but why it's moving and how to trade it. But their basic understanding of or interest in macro and options is essential. I'm not that type of trader educator at all.
Okay, so more of the intermediate term to advanced.
Absolutely.
That are interested in intelligence gathering and having a good sounding board like you.
I hope I can prove a good mentor.
Okay, so what's the best way for people to get a hold of you? You're showing your website. Is it www.leduketrading.com?
Yes, it is, and I'm sorry you couldn't see all the other stuff. I apologize for not
but we get it.
knowing how to work your screen share.
All right, we get it, and
right.
great furl about the gap in the bonds and commodities not being ready yet, and bounce in the dollar should continue for a while, and that this could be a generational top after we shake out the last of the bond bears here.
Anybody wants to get a hold of me for those specific slides, it's Samantha@leduketrading.com. I'm happy to make up for that lost time.
Okay, Samantha, thank you so much for your time and sharing a little bit about your journey. And my gosh, what a great start you had, being short during one of the great bear markets in the history of the U.S. And I wish you and all the people that gather with you in your room every day nothing but green dollars or euros just falling on top of them the rest of the year and going into the next. So again, I'd like to call you my trading warrior sister, and thanks for hanging out and edifying our community on Halloween today.
Oh, my pleasure. Thank you again. Have a great afternoon.
Thank you, Samantha.
Bye-bye.
Everyone, that's Samantha Duke. You could follow her at Samantha Duke.
LeDuke.
LeDuke.
Yep.
Thank you, Samantha. And that's going to be it for us today, everybody. Good hunting. And there's people thanking you, Samantha. Well done. See, I told you you'd do great. And why 2018? So people were paying attention, Samantha. Thank you for your time again.
Take care. Bye-bye.
Bye-bye.